Good morning and welcome to the Morning Spotlight Podcast. I'm your host, Mike Ham, coming to you as always from the Spotlight Studios here in Morristown, New Jersey. My guest today has over 10 years experience in acquiring and repositioning multifamily assets and generating exceptional returns on capital. He left a high-paying W-2 job to invest in real estate full-time. He is Michael Gilman. Michael, welcome.
Thanks for having me on.
Of course. So why would anyone quit a high-paying job? Like that to me seems like backwards, because if you're making money, isn't that the name of the game here? So why quit a high-paying job?
Yeah, sure. I mean, really, at the end of the day, right, it comes down to freedom, with your time and to do things on your schedule. At the end of the day, what does it matter if you're getting all the income in the world when you can't really enjoy time with yourself, your family, your friends, and doing the things you love? And that's what dawned on me and what got me started in real estate.
Yeah, awesome. All right, so let's go through, like, just as your life. Let's learn more about you. So, what was this job that you had before going into real estate full time?
Sure. So I ended up going to, well, we could even start further back.
Yeah, let's go further back. Let's take it from birth.
Let's
not that far. Yeah.
Start with post-college, graduated with a liberal arts education, didn't know what to do. Went to, I had studied philosophy, literature, economics, was always into economics, but ended up going to law school at the time. Quickly realized I didn't want to work at a big firm. So I started working in-house at banks, interned there, and that's where I started my career after law school, was at investment banks. So I was first a regulatory lawyer. This was right after the financial crisis. So one of the first cases I worked on was, I was at Bank of America at the time. They had ingested Merrill Lynch, and there was just a lot of regulatory action around their portfolio of what was called mortgage-backed securities, CDOs, collateralized debt obligations. These are essentially the products that tanked the company when they were marked to market. But started there and kind of made my way to more supporting trading and lending businesses, and had started during this time investing in real estate. So I guess we could just start with what got me started was I had always wanted to be a trader or on the financial side. And, after doing some rotations on some trading desks, it was clear that, first of all, the kind of job security that they had there was a thing of the past. Technology was replacing traders. This was on the trading side. And everyone was telling me to stick to, the regulatory or the legal aspect. And I was just searching around for sound investments. I just seeing what was going on after the financial crisis with some of these complex exotic instruments, seeing how quickly trades go sideways with events outside of any things anyone could have predicted. Case in point, we look at the coronavirus, right? Took everyone for a tailspin. That kind of tail risk seemed to just emerge time and time again. And, when I looked around, I just kept coming back to real estate as what seemed to be one of the safest investments and something you could just build a passive income around and eventually have that kind of sustain you if that's what you wanted to do. And, I concluded that was my path, because I wanted to run be my own boss, do things on my own time. And there was really nothing seemed to be able to provide that other than passive income.
Right.
The legal practice, just as many professions, at the end of the day, you're just trading time for money. Right. So that was the big goal, was to escape from that,
right.
Manner of earning wages.
Yeah. So when you're going through this legal career and you're doing all this stuff, so you said you started investing in real estate because you saw that was, an investment that you felt comfortable doing and had good returns. So what were the first couple types of investments that you did make?
Yeah. So at the time I was in New York City, working Manhattan, and the whole market, the whole tri-state area was super competitive, very low cap rates throughout the entire time I had known it. And it was, I wanted cash flow first and foremost, and I wanted, something where I didn't have to speculate on future growth. So, so I was looking around for higher cap rate markets, cash flowing markets. And I'm a big outdoors person, big skier. I've spent a lot of time in Vermont, New Hampshire. And so I actually started investing there after I noticed, the multifamily properties there had really nice cap rates, 8, 10+%. But what really distinguished it was these weren't like bad areas or, a really tough population base or anything like that. These were just markets that didn't have many operators. They didn't have really many buildings of size. So it was kind of this backwater that had been a buyer's market, throughout this whole time where I started investing in it. So, I started with, I kind of went big on my first one, a 20 unit, and then just started building up from there, just building out a cash flowing portfolio.
Right.
And then eventually getting enough experience where I felt comfortable syndicating and taking on other, investors' capital to do larger deals.
Right. That's funny. So fun fact about me, I've only been skiing once in my life, and it was in February. I got dragged there by my girlfriend. I made it down. We went on like the bigger mountain to start, and like it was a disaster. I just like kept falling. I was using like her dad's skis. They were way too big. And then I did the bunny slope a couple times after that, and then I felt better. So I was like, I'll do it once a year. But I've heard great things, excuse me, about Vermont. So yeah, I think that's a great area to do that. So as you're basically balancing these two things, right? At a certain point, you're balancing the real estate investing with the actual job. That's right? Right?
Yeah, that's right.
Yeah. So then, yeah. So at what point did you like? I know we talked about it at the outset, but at what point do you be like, hey, this is where I need to be like full time focusing on this? Was that just an easy decision, or was it something that like took a big, was there risks involved? I guess.
Yeah. So, it really came to a head when I transitioned to raising capital. It was just more time consuming, much more moving parts in terms of syndicating, where I felt like in order to really pursue this successfully, I needed to devote all my attention and focus to it to build out the platform and kind of corral all these moving parts and get, a team and a system up and running, and, kind of take the next evolution away from just me investing principally. So essentially after I had my first syndication done is when I made the leap.
Right. Okay. So then you're talking about these multifamily syndications. How do you put together your team, I guess? Do you have a team? I'm assuming you do, because I'm sure you're not managing all your own proproperties, right? So
Sure.
how does that work?
Yeah. So we'll just start with, take it back from the beginning when I started investing in these local markets. Quickly you have to build a team or else you're lost. You'll live and die by your team. So first and foremost is really your property manager. So in a small market like that, we actually developed a kind of unique infrastructure where we hybrid self-manage, just because there's not any I don't think there's any kind of the property managers up there are pretty expensive, and for what they offer, it's just not worth it. So we kind of built out this hybrid model where we had a GC and kind of grounds guy who ran a grounds crew that took care of the properties on a day-to-day basis and addressed any issues. And then we ran, my wife was helping me. We ran the books and the property management software on that portfolio. And then for the syndications, so for example, we just closed one in a major city in Denver in February, right? That's a, much more developed, mature market. You have a lot of property managers. And certainly we think our best use of time is not focusing on that and giving that aspect of the job to the property manager. So yeah, so the team, right? It's just you got to dive in and get out there and meet people, interview people, become friends with people, go out to beers with people. Right, the key people on your team, your property manager, if you're, I tend not to use a buyer's broker. In fact, I'll get roasted for this, but I discourage it, and we could get into why. Um, your lender, and then obviously the kind of back office support.
Right. So let's dive deeper into that,
Yeah.
because controversy sells, man. So we'll do the controversial topics here. So why not a buyer's broker?
I think because your offer will be more competitive to a listing broker who will not have to split their commission. I can tell you time and time again, I won deals by virtue of not having a broker, and magically the deal gets steered to someone that's not the listing broker doesn't have to split their commission with.
Right. Okay. All right. Okay. All
And
right. But so then sorry, I'll let you go in a second, but so then how do you actually find these deals? Because I'm assuming if you're using a buyer's broker, they're like helping you find properties that fit your wheelhouse, right? Is that correct?
Yeah. So there's a number of ways, right? Of course, there's the MLS, for commercial, multifamily. Depends on your market, but in many markets, properties won't make it onto the MLS. In the tertiary markets, I found that everything tends to make it to the MLS just because there's such a limited buyer base. But certainly in more competitive markets, a lot of it is inside. It's pocket listings, off-market transactions, relationships. So, I mean, first and foremost, it's finding deals is doing the searches yourself where you can. Have some kind of automated process that pulls from the public listings. Super easy to set up through, LoopNet or Crexy, crdxi.com. And then you have to build out your relationships with the key brokers in the market. To attack sort of the top 10, 20.
Right.
That's something we're always working on and looking to improve. And thirdly is off-market deals, right, which could come by way of pocket listings, through brokers, through relationships, through referrals. For example, a great source of referrals to me have been lenders, especially one of my commercial bankers, who when he hears his client wants to sell, he lets me know, and I've gotten several great deals that way. So kind of just building out that base. And then lastly, there's third-party off-market search services, or you could just build it out yourself. Cold calling, things like that.
Right. So as we're talking about this, and you're talking about these different markets and working with these people in these different markets and getting to know them, we've had several, I guess, multifamily syndicators that have come on the show and talked about their process. And I always just find it interesting because everyone does it like a little bit different. Like it doesn't seem like there's two people that do it exactly the same, whether it's the type of, the markets that they're in, the types of buildings, all that kind of stuff. So one of the things that I'm always interested in is, do you actually go and see all these properties in person? So like if you're talking about Denver, do you have to, are you the person that flies out to Denver and goes and see it? Or do you just kind of know what you're looking for based on like the specs of that property and then just go for it? Because some people, I've never seen any property that they own, which I find like insane to think about. Others are there, checking in, want to be on, more hands-on. So where do you fall in that spectrum?
Yeah, so I will see the property. It may not be till after we're in contract. So just taking Denver as an example, we'll use our general contractor there, or someone else on our team to go scope it out first. But certainly before I start raising capital, I will go see it myself, just because, especially, there's certainly, you can get, perhaps 90% there with technology and walkthroughs and pictures and Google satellite and this, that, but nothing beats just the in-person experience. You just pick up on a lot more. And there's just things that'll kind of you know, the vibe that you'll never be able to pick that up otherwise. And it's important to understand the vibe, because that, when you're transforming an apartment complex, how you have to be there to kind of envision, can this transformation happen? Does the area support it? Can you foresee a different type of tenant base there? So yeah, to the answer to the question, I will see it sometimes it may be after contract,
Right.
but definitely before our contingencies are up.
Yeah. So what about like in investors? Because I feel like that's another thing that people, they differ on as far as like how they attract investors, the types of investors maybe they're looking for. So talk to me about that. Like, how do you find them?
So, we're still kind of at the friends and family stage, or just internal network. We're starting to build out more of a thought leadership platform. But, traditionally, right, what I've learned from other podcasts is what I've implemented is starting with, you need a track record first, or some type of experience. Start with friends and family. And a sort of a closer network, and then try to build out from there. Try to put in systems and processes where you can convert, people you've never met to potentially become investors. Right? Super difficult. It's relationship building. It's trust. It's not done in a day. It's just a dedicated process. So, one of the things we're working on now is just funnels, and using active campaign and drip campaigns and things like that.
Right. So do you also get yourself involved in like maybe as an LP and other syndications, or are you primarily focused on doing your own?
Right now, primarily focused on doing my own. We will get involved in other syndications. If we're invited to come on as a co-sponsor and bring capital. But right now, we are primarily looking at.
Gotcha.
Yeah.
Okay. All right. So I was always curious because that's another thing that, other people differ on and whatever. So, majority of my listeners of this show are between the ages of 25 and 35. So they're either new to real estate, they are, in a job like maybe you were, and then are looking to either get out of it or start investing in real estate. So, what were some things that you were doing early on? I mean, I know you were involved in the real estate world, but was there educational type things that you looked to try to like help prepare yourself what you were about to get yourself into?
Yeah, sure. And so, it's funny, right? I was an attorney. I went to law school, but at the end of the day, I got my education started at Bigger Pockets.
Yeah, there you go.
So, I started just like anyone else, kind of stumbled upon it, read about it, read some books, started with, single family versus multifamily, analyzing deals, so on and so forth. And then just made the leap, because I'd say, just getting back to your question, getting started, first and foremost, it's educating yourself, getting yourself in a position where you can analyze it yourself, not rely on anyone. And certainly you can have mentors and get feedback, but really you need to get to a point where you understand your analysis and why you're doing what you're doing. And then just taking the leap, because nothing will ever be, cold hard experience.
Yeah.
The most valuable, education out there.
Right. So maybe like outside of education, is there anything else that you would recommend for those types of people that would be looking to get the jump on it? Or is it really just kind of come down to the education side of it? I mean, the experience side of it.
Yeah, I'd say, again, the education, the great podcasts out there, great books, teaming up with someone with the experience, which the way to do that is to be able to bring, something of value to that person, whether it's capital or a deal or something else. Typically, for people just looking to start out, it's going to be a deal because they don't have the capital necessarily. So really getting in the trenches and learning how to underwrite deals and how to find good ones.
Yeah. Yeah. So that's another, I think, issue that holds a lot of people back, because if you're, a first job out of college or bouncing around trying to figure out what you want to do, you might not have the capital to get involved. So I think that's interesting because, there has to be ways that you can get involved, because you want to start that process, because if you just like, well, I don't have enough money to get involved, because, you talk to some people and they're like, well, the minimum investment that I take is 25,000. And I'm like, well, I've never had 25,000 ever. So how do I get myself involved? And I think that's a great point. You have to be able to like provide some type of value, right?
Yeah, and the not having the money really is an artificial barrier that's set because, and other people's money is one way to bridge the gap. Another gap is creative financing, um, perhaps using 100% leverage to buy an asset. So and it's actually much easier to do than you'd think, right? A commercial lender, unlike a traditional, your regular way sort of residential Fannie Freddie mortgage on a single family, right? That looks at your debt to income. It looks at your ratios, your credit. But a commercial lender looks at the property, right? They underwrite the property. They have what's called a debt service coverage ratio, key ratio there of income relative to the debt outlays, debt payments. So if you're checking those boxes as in terms of it's a cash flowing property, the lender typically won't. It won't be an issue if you where that other portion of the capital comes from. So let's say in your capital stack you have a first position, major lender bringing 75% to the table at typical commercial terms. That 25%, there are many ways to float it. There's if you have an asset where you could get a line of credit on, such as another house, your primary house, or a relative's house, family member's house. If you have some way to get some type of line of credit, again, asset backed, business backed, right? You can pull that and bam, you can finance the whole thing. Just big caveat there is don't over leverage yourself. If you are doing that, make sure you have a very strong cash flowing property, with a nice high cap rate to be able to support that kind of debt. And there's, again, many ways. There's seller financing. Sometimes there'll be reasons why a seller would be amenable to that. Those are really the kind of two big ways I've seen it done, and I've done it.
Yeah. Talk to me about other people's money, because I hear people talk about that all the time. So if somebody, I mean, obviously it is what it is. I mean, it's other people's money, but how do I take somebody else's money and use that to invest in a property?
So you have to, I mean, first, you have to see, what is it going to be, equity? Is it going to be debt? So other people's money, here's an easy example. If you have a relative, they could extend you a loan behind that first one, a second position loan. It's not recorded, right? There's no lien on the property because the primary lender won't typically allow that, but they know you, so it's not a big deal. And assuming it's a slam dunk deal, that's a good way, especially getting them to funnel that money into an STIRA where they won't be taxed on the income. That's a great way. And actually investing as extending a loan out of an STIRA is one of the ways you can avoid UBIT taxes, but that's a whole nother discussion.
Right.
So yeah, it's essentially other people's money is easiest. It's trust, right? First and foremost, friends and family. If you don't have that track record, or one of these other creative ways.
Right. Okay. Interesting. I mean, that's like, good to know, just because I feel like people would never even maybe think of that, I guess. I mean, maybe they would. I mean, obviously people have thought of it, but that is just another way to get yourself involved in the game, just, leveraging your relationships. And that's really what, at least to me, this syndication thing just seems like it all comes down to relationships. And that's a lot of what business is, right? Because it's just, you want to make sure that you have, people want to do business with the people that they know, like, and trust. That's like the most overused phrase ever, but it's true. People want to do that. So one of the things, because I always, when I get people on the show, and you did this for me, I asked for a bio and some, things that help me, excuse me, get prepared for the episode. And one of the things that I was reading here as we were kind of going through this conversation is doing deals in tertiary rural markets and why they can outperform. So talk to me about rural markets and why that's something that you think can outperform.
Yeah, so I think especially now that this is more kind of germane than ever, because what you're seeing is a generational shift in how and where people want to live. And it's not just COVID; it's affordability or politics. People are just pouring out of a lot of the big cities, at least certainly in the Northeast. Um, so the thing with these tertiary rural markets is, first and foremost, they're outside of institutional buy boxes. If you have an area that's under, say, 50,000, 100,000, it's just going to take out a whole class of investors. And then that leaves kind of local mom and pop investors in these markets. And so you just don't have capital chasing deals. And it's really supply and demand. That's what it comes down to.
Right.
It's kind of the same way there's just obscure niche strategies that no one's heard of, that when you hear them, they're like, wow, they made so much money from, I don't know, what's a nice obscure strategy I've heard of recently? Well, not a great example is there's a sponsor that's right now doing ATM syndications, something you'd never think of, but when you look at the numbers, it's a slam dunk, phenomenal investment. Why didn't anyone think of that before?
Yeah.
Things like that.
Right. Okay. So one of the other things that I always like to ask people that are doing stuff like this is that, multifamily, you have your thing, you're getting good at it, you are good at it, you're growing your portfolio. Do you ever see yourself investing in other types of property, like maybe industrial properties or anything like that? Or is it something where like you go with what you know and stick to that and just get really good at one thing?
Yeah. So, we're looking at, we do self-storage as well. We have some self-storage. That's an easy one. It's getting really hard to find deals that hit kind of acceptable return thresholds, at least the way we see it. So we're looking at branching out perhaps into hotel conversions or conversions into multifamily. The other asset classes are just right outside of our core competency. So
Right.
that's why we're not dabbling there, though. That's certainly not to say that they're not good investments. It's just a matter of, you do have to narrow in and focus to get any kind of to get somewhere.
Yeah. No, absolutely. I think that's a big thing. I mean, like I said before, we've had a lot of different people that invest in a lot of kinds of real estate. Some diversify, some don't. And I just always think that it's, some people say that a good deal is a good deal and they're going to get involved if they can. Other people are like, well, I'm just going to stick and be an expert on one thing or two things, whatever it is. So as we talk about the future, so maybe what are some goals that you have for yourself? We could even look over the next year or so, as you continue to grow your portfolio and grow your business and all that kind of stuff. What are some things that you're looking to accomplish?
Yeah, it's get to scale where we're still small. The portfolio right now consists of my own principal holdings and a few syndications we've done. We're about 20 million assets under management. So the goal is to get to 100 and scale up from there, and build a process and systems where I can step away from it as much as possible, and where there's team members I can rely on to take the lead, and just much more, I guess, company and corporate like with process.
Right. Yeah. So you mentioned earlier that you and your wife were working on some of these properties together, right? Doing the books and all that kind of stuff. Is this just like, do the two of you do this full time? Does she also do something else? So is it the two of you, just you? How does that work?
Yeah. So when we started out, when I was working in W-2, she was, this was before we had kids. She was a huge help, and got the admin and property management side squared away. And now that I'm doing it full time, and we have kids, she's merged more to a kind of support a marketing role, a more admin role.
Yeah.
but still involved with the business for sure.
No, it's good. It's good to have two people, helping and, helping get the word out and all that kind of stuff. Because like we said, it's a relationship thing. So marketing is always good. Admin stuff is always great. I was just curious because that's another thing that I've seen also with some other different investors is they're doing it with their wife or their husband or whatever. So if someone is listening to this episode, and I know that we talked about, getting involved in real estate and all that kind of stuff, and they're like, that Michael, I really want to get to know him better. I maybe somebody that I want to, become one of his investors, like we were talking about before, like how you go about finding them. Do you have I know you said you're getting more corporate with your processes, but do you have maybe like an idea of what that process could look like? Like, what are the first couple of steps that they would have to do in order to start working with you?
Yeah, essentially I look to schedule a one-on-one call with someone, get to know them, just understand what they're looking for, what their risk profile is, and make sure it's a suitable space for them. And the process is essentially emailing me or signing up on our website. We have several areas on our website where you could become an investor. And our website essentially divided into two kind of tracks. One is if you just want kind of website, newsletter updates or access to some of our resources. We have some ebooks about investing with a retirement account, and as well as why real estate can outperform the stock market in the long term. Or we have a sort of direct to investor process where you just enter your info and meeting is set up, the call is set up. So once we have that call and we confirm it's a good fit, then they kind of want move to our join our investor network status.
Awesome. So, and like a good fit would differ from investor to investor, right? Because I feel like maybe there's instances where if it's not a good fit for a variety of reasons, you got to turn people away sometimes, right?
Sure. The big thing is real estate, right? A passive investment in a syndication is a illiquid investment. And so it typically wouldn't be suitable for someone that needs liquidity. That's an example, right? Of someone
right.
we wouldn't be a good fit.
Gotcha. Yeah. So I want the more personal side, because one of the things that was included in your bio was that, and you mentioned earlier in the episode that you're a big outdoors guy. And one of the things that I saw on here was that you run obstacle course races.
That's right. Yeah.
So like what kind of obstacle course races are you running? Are they like Tough Mudders and stuff like that?
Yeah, I've done Tough Mudders. Right now, done a few Spartans. Right now we're preparing for the Spartan Beast in Killington, which is about 16 miles up and down the mountain, 30 obstacles. So, it's kind of helps me get in shape. I find if I don't have something I'm preparing for, then it's hard for me to motivate and keep in shape. I tend to fall off quickly.
Yeah.
And
same.
part of it, just you kind of like go through the beating and the pain. And at the time you're like, I'm never doing this again. But after you're done, you're like, oh, wow, I did that. And you kind of feel like you've leveled up and accomplished something.
Yeah. So. Yeah. So, not just preparing, but preparing for something that just kicks your ass. I've never done one personally. I think that they're, I don't know how I would handle something like that, but props to you, man. I think respect for doing stuff like that.
Oh, thanks.
Yeah.
But we actually, we try to make it a company thing now. One of my partners is doing it. Hopefully we'll get some investors.
Yeah. Well. There you go. Yeah. I had a woman on the show once, and she did like a 24-hour race in the desert in Vegas, or like right outside of Vegas.
Yeah.
And it was just like they kept going. It's like a 5-mile course or some crazy thing. And it's like you got to go over all these obstacles and you just keep going. And it's like the middle of the night, you're in the desert, and like people that do that, they're looking to accomplish something for sure. I think it's cool. I don't know if I would ever do one myself, but who knows?
Yeah.
Yeah. And then what else you got on here? Trail running, skiing, obviously we covered. Mountaineering. What is mountaineering?
It could be a host of any mountain activities, mountain climbing, trail running, just getting up the mountain.
Gotcha.
Um,
So you're just like fascinated with you love it. You love being it. We were even talking. So for everybody that's listening to the show, we were talking before we even got on that Michael and I have the common interest of smoking meats with, smokers and all that kind of stuff. So you're just like, you just try to be outdoors all the time. I love it. That's where this rural market thing comes in. You just like the outdoors, open spaces, all that kind of stuff.
yeah, absolutely. I think maybe part of it is because I was a city kid, perhaps, but it's the just kind of this feeling you get out in the open nature. And again, yeah, there's something about these areas that are located in these mountainous communities. It's kind of anchors the community. There's so much to do in the summer, the winter. I think the population tends to be healthier.
Yeah, for sure. All right, so we're going to move the episode into our closing segment, which we call Under the Spotlight. So Michael Ham and Michael Gilman have been talking for about 40 minutes or so. So the Under the Spotlight segment is we're going to get your final thought. So the Spotlighters is what I call the listeners. They've been listening for 40 minutes. So you're under the spotlight. What is your last point of this episode?
I'd say just in terms of moving forward or getting started or wherever you are or whatever challenges you're facing, and it might sound cliche, but just never give up. Keep at it. It may feel like you're failing, but eventually it just takes one time where you succeed, and it makes all the difference. All of a sudden you're kind of on a different plane, and you've elevated yourself. So whether it's looking for deals or trying to raise capital, or just getting started in learning, about the space and reading, just keep at it relentlessly. Make a goal and stick to it. One of the things I learned from someone else was when you envision it, write it down, and say it to yourself daily, and work on it. And more often than not, it will come to pass.
Awesome. All right. So if they need more Michael, where can the Spotlighters go to get more of you?
Yeah, you could check out our website, crossmountaincapital.com. We have a resources section there with a bunch of ebooks, a bunch of articles, or don't hesitate to email me, mike@crossmountaincapital.com.
Awesome. And I will make sure that I put all those links and the email address in the show notes for everybody to reach out to Mike. Also, I will put my contact information, themorningspotlight@gmail.com, and the website, themorningspotlight.com, in the show notes as well. If for some reason you want to go through me to get to Michael, that's fine too. Be happy to make the connection. So Michael, thank you so much for coming on with us today. This was great.
Thanks. It was a pleasure.
This was your first podcast episode, right?
I've done a couple.
Done a couple? This is probably the most fun you've had on a podcast.
Absolutely.
Yeah. Awesome. All right. Of course. And everybody, thanks for listening, and we will catch you next time.